Hello, everybody. So today I have a special situation stock, specifically an IPO. Many of us have been invited by our broker saying, hey, do you want to invest for between 25 and 28? How many shares do you want? Maybe we can get you in. And this one caught my attention, of course, because Figma is one of these stocks that has the potential to be a blockbuster stock. It is the arch nemesis of Adobe. Adobe tried to acquire Figma to neutralize it. The administration back then in 2024, 3 or something, they didn't let them do it. So I guess now Figma is going to have to crush Adobe. And this is kind of like this story of two stocks, this tale of two stocks. And frankly, Figma is a winning story. Of course, at your companies, you've probably heard of it. If you've had any sort of a professional job, you've probably heard of it. The design person is always crazy about Figma. I learned a lot in their prospectus. They design some of the best UX, UI experiences, which we all love. Like, I had no idea they designed Uber and DoorDash or Netflix or Duolingo. I haven't looked it up. Robinhood is designed on Figma. That's what I looked up. I was like, what's going on? So, and all of this, of course, coupled with the fact that, but of course, in general, I'm against IPOs. In general, there's a lot of hype with IPOs. You got to be careful. A lot of people get burnt with IPOs. But given the situation right now where we may be entering a new IPO phase, I want to call your attention to Circle, right? Circle did a 3x. It looks like it's a 2.5x now from IPO. Circle was mispriced, and it did a 2 to 3x in a matter of a month, roughly. And it seems to be holding up pretty good. Wall Street has been mispriced. Circle is Wall Street maybe mispricing Figma? That's kind of a question. They're predicted to go public at a market cap of $16 billion. That would be between $25 and $28 a share. And so with these numbers, let's talk briefly about Figs. And again, we don't have much history. This is an IPO. This is riskier, but I'm going to walk you through what they do, and then I'm going to compare the valuation on my spreadsheet, the valuation of Figma on my spreadsheet, versus the valuation of Adobe. And you'll find that actually I find Figma much cheaper than what Adobe is actually currently trading at. So Figma is a multi-team, like multi-individual team tool. It's seat-based. They charge a monthly price per team member, and it's a multifunctional team. And you have developers, researchers, marketers, designers, a whole bunch of people. Most of them are not designers, actually, and they collaborate and they work together on the product, and the product is typically a digital experience, not to say almost exclusively a digital experience. Or at least, an experience of ones and zeros. Netflix, right? Netflix is one of their customers. I went through some of the customers that they have, famous ones, right? Netflix, Duolingo, DoorDash, Stripe, Airbnb, Google Maps, Mercado Libre, Uber. And then I even researched Robinhood, and Robinhood uses it. You see, they have 343 users at Robinhood who are using Figma. So even Robinhood is likely designed on Figma. And you know how much I've praised the UX and UI of Robinhood on this channel. It is so painful whenever you have to use a Schwab or whatever. Anyways, billions of people around the world use their apps that are designed on Figma, right? So this has replaced a lot of the website builders of Adobe from back in the day, right? This has replaced your PDF readers and your Flash-like apps and all that sort of stuff. It seems like Adobe is winning. Adobe is a cloud-based solution. It's delivered on the cloud. You get a login, you get a password. You don't have a bulky software. It's all in the cloud. Moving on to what they do, they're the UI and UX leader. Their motto is pretty nice. Design is everyone's business. And then they go on to tell you that 2/3 of the users of Adobe, of Figma, are actually non-designers, and that's only going to grow. Design incorporation is kind of that odd placement. Like you're not really marketing, but you're like not really a developer. You're kind of stuck in the middle as a designer. So, anyways, that only makes sense that it would grow. 13 million monthly active users at various corporations. 95% of Fortune 500 corporations use Figma. 78% of the Forbes 2000. So this means that as far as company count, smaller companies are now going to have to be the thing. But here's the thing. Even if you don't grow the count of smaller companies, not only are you growing very fast revenue, year over year of revenue growth 46%. So that's price increases as well as more features being added by the users. But I want to call your attention to the net dollar retention rate. So existing cohorts, how much more do existing cohorts spend year after year? How much more do existing cohorts spend year after year? That's 32%. So that's already baked in. So if that holds up, or if that even grows higher than that, you kind of have that 32% next year's growth already baked in the forecast. That's the beauty of these SaaS company, of these recurring revenue companies. So that's very impressive to me. And of course, they have a bunch of products. 76% of the customers use 2 or more products, but they try to upsell you on all sorts of products. And that's typically how these companies grow, sometimes very much exponentially. You try to have your top customers use different product suites, different product features, different add-ons, and you can grow both in customer count and in numbers of customers, options, uses, and what you sell to them. The revenue I'm going to use for this number is the 3 months ended March 31st, which is probably higher than that already, but I'm going to use 228 million times 4 in my number. The termination fee of $1 billion, I don't know how to account for that, so I'm still going to use 16 billion. We're still going to be well within the margin of error, but keep in mind that the enterprise value may actually be lower because that's a huge termination fee they were able to get in 2023. This is pretty stunning. They were able to get that. Anyways, moving on. So what do you have? You can see they work with designer, marketer, writer, developer. Everybody works together on the app. The app helps you, do the classic, circle of product design or entrepreneurship, which, you ship your minimally viable product, and then you go back to the drawing board and you improve and you iterate and you improve and you iterate. All of these design concepts that you find in modern day corporation, they have their own version of the loop. Of course, all of this is customizable. The 1.2 trillion is what they say, could potentially, that's investment in software, but out of that is $1 billion in app, and the total addressable market is 33 billion. So taking into account that number, 800 million right now is their revenue run rate, roughly 800 million. So yeah, you could do like a 40x in revenue, assuming they capture everything. Of course, they're not going to capture everything. They're going to share some of that with Adobe, but as we'll see, Adobe's revenue is about 10 billion. So Adobe doesn't capture all of that either. And they show you their ideate, visualize, build, and ship. So again, it puts your artists, it puts your UX designers, it puts your coders, and then it puts the actual marketing and deployment and the actual team that delivers the product. It puts it all together in one app. This app is kind of a no-brainer. You kind of have to use it at a lot of modern day corporation. Think about all of the elite corporations that use Figma. This is Duolingo, like I said. You have that list over there of companies that use it. It's a little bit like Shopify, right? So like if you're gonna be a top company, oftentimes you're going to run on Shopify. Well, you might also have to run on Figma for your design, at least for the digital experience version of your company. And these of course, all of these products, most of these products are non-physical products. So anyways, moving on. So what do they have? They have a feature for your artists to draw your logos, etc. Your vectors, as they call them often. You have the developers who work on the app. You have the makers who work on the app, product managers who work on the app, and you even have websites. Yes, they still do website. They still compete against Adobe on the simple website, if that makes some sense, even though these days websites look a little outdated. Anyways, let me conclude with how they charge. So they have a starter pack, which is free. That's how they recruit people at schools and interns and etc. etc. And then they start charging you. You can see the minimum you can get with is $3, but it's probably extremely limited. $5 is pretty much your minimum. And if you want to be an active user, you should count probably $20 to $50 or even more than $50, right? $90 a month for an enterprise solution. And you can see these are all the products that they have. You can add more products to the mix. Another point I want to point out, and this is true for so many of these companies. Datadog has that, Snowflake has that. How do you make yourself indispensable when you're going to be a SaaS company? Well, you need to have some network effects. I found that very interesting in the prospectus. 10,000 plugins and widgets that you can customize. So they have their own marketplace for plugins and widgets that you can use to make your app more indispensable. So that's also a big plus that makes the app much more sticky. According to AI, their market share in the design software industry is 40%. So again, eating away at the Adobe market share. And I'm gonna use adjusted free cash flow. I can't really find. Well, I don't have it, right? I'm sure I could calculate it, but I didn't do that for this video. So I'm just gonna use 28% adjusted free cash flow. It's a little higher than 18% operating margin. It makes sense. Usually adjusted EBITDA margin is more expensive. It's higher than operating margin. So I'm just gonna use 28%. Doesn't matter even if you use 18%. They still handsomely beat Adobe on the rule of 40. So, and like I said, 46%, that was the trailing 12-month revenue growth, plus 46%. But their dollar net retention rate is 132. So baking in 32% and assuming they're going to do a midpoint, I'm going to use 40% as my next 12-month growth number. And for Adobe, I'm using the analyst's average. The analyst average for Adobe is 9%. And so we conclude with evaluation. So we compare. I'm using an optimistic EV, assuming the IPO goes well. I'm using a $16 billion enterprise value. Revenue run rate. So I couldn't quite get the trailing 12 months, but using the revenue run rate, I'm doing $913 million. That's going to grow pretty fast. That probably has grown already because we are quite a few months away from March 31st ended. But anyways, I'm using forward revenue growth of 40%, gross margin of 91%. And what do we get? We get for the sector a reasonable 0.48. And we get a very nice 68 on the rule of 40. Of course, if I compare this to a healthcare stock, that's no good, right? If I compare this to a lot of my cheapest stock videos that I do on the channel, that's not very good. But if I compare it to its peer, and you can look on my spreadsheet I have on Patreon, this is actually excellent. In the software as a service business, this is on the lower end of the range. And perhaps the best test is, well, what is Adobe's number on this? Well, Adobe's number, and you can see Adobe's a more mature company. They have EBITDA margin of 39%. Gross margin is the same, right? 91 to 89. This is a pure margin business. But anyways, growth rate is nearly not as good, 9%. So Figma goes 4 times faster than Adobe, maybe 5 times faster, depending on which number you want to use. So you have a company that's nearly twice as cheap, that goes 4 to 5 times as fast, and that has a 50% greater rule of 40. And so, to me, in comparison to Adobe, it seems like a no-brainer. The game of design has 2 players in town. It's Figma and it's Adobe. I think Figma is winning. I think Figma is going to keep winning. Keep in mind, the revenue of Adobe is actually, I was wrong, I said 10 billion, it's actually 22 billion. So they have about half of the total addressable market. Adobe has about half of the total addressable market. So Figma has a huge runway for growth, and they're going to raise 1.5 billion from that IPO. So that's going to be invested in growth. They're going to be able to advertise, probably do customer discounts, all sort of stuff to try to grow and all sorts of stuff they can do to grow. So if I were to bet on a company between the two, I would bet Figma. With this valuation, this would be kind of a hybrid between a cheap stock. It's not that expensive compared to the sector. It's more expensive than some other stocks that I follow, but you have the one wild card, which is what if this business ends up trading on EV over GP over RG at like a 0.8, like your typical SaaS company, right? That's the wild card of the hype. That's the wild card of what happened to Circle. So I like the risk reward very much on this one, and of course you will know whether I buy or not. I share it on Patreon, and you will know. So anyways, thank you so much for watching. This was not financial advice. This is not investment advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.